So this morning what I'd like to do is give you folks a real broad strokes overview of the private lending business, how it's changed, how it continues to evolve, and how real estate professionals can benefit from private lending solutions for yourselves, your customers, and your businesses. Just to give you a little background, I am the managing director of Rehab Cash Now. We continue to grow at a rapid pace. Our portfolio now consists of nearly $50 million in loans on the books. 175 loans make up that portfolio. Typical loan for us is usually a couple $100,000. However, we do go from $50,000 all the way to $2 million. Just a little background on myself. I have been in the real estate business for 20 years. I've owned residential properties. I continue to own commercial properties. I've bought them, I've fixed them, I've flipped them, I've just about everything you can do in the real estate business. And when we formed this company about 4 years ago, I brought my experience into the lending world. So let me give you a little background of where we are today. Let's talk about the state of the New York mortgage finance industry. So the U.S. mortgage finance industry was hit incredibly hard. We all know what happened in 2008, and we continue to talk about it today. The bubble that peaked in 2006, while we have recouped most of those losses here in New York and continued on to even bigger and better places, much of the country still continues to struggle. However, we certainly are in recovery. Here in New York, the latest numbers in August, the number of properties that received foreclosure filings was 26% higher. That was a blip, 19% lower than the same time last year. So let's talk about the U.S. overall. Although the industry is recovering, the 2008 crisis caused many commercial banks and other traditional lenders to implement much more restrictive lending policies. Conventional loan guidelines often do not allow for any sort of non-owner occupied funding. This, in addition to Dodd-Frank, I didn't hear any applause when Dodd-Frank got mentioned, so I'll continue on, is expected to restrict the ability of community banks to provide the volume of small balance commercial loans that they provided in the past.